Simon, son.
Well, that's the first time I've had my name chanted at a fintech conference, but hopefully not the last. Hope everybody's well. Today we are talking about what do builders need to know about fraud, other than the fact that I feel like a fraud with this amazing panel to talk about fraud. You can laugh if you want, that was terrible. You can tell I'm a dad now, can't you? Shit dad jokes. All right, so I'm going to ask everybody to do like a 10-second version of the resume, just because I think whilst you all have job titles now, the career track record is actually sort of super interesting for jumping into that. So Stephanie, do you want to talk about your career track and the 10-second version?
I'm a certified financial planner turned payments nerd. I spent a decade building financial planning technology and really wanted to solve the problem of why doesn't money move instantly?
Love that. Shamir?
I used to be a fintech financial services consultant, co-founded a neobank called Simple, 13 years ago, built API platforms at a bank, got frustrated, and then started Upsilla 4 years ago to help people program with money.
Beautiful. Tommy?
I actually have no professional background to speak of, other than I started a company called Alloy 8 years ago that does identity orchestration and risk decisioning for fintech companies. Before that, I was kind of just a shithead hanging around Richmond, Virginia, writing code.
Well, I'm still a shithead, so love it.
I think it's still a good first step.
Yeah, I think the first thing I've done has gone all right.
Did okay.
Yeah, I'm Soups. I am CEO co-founder of a company called Sardine, and we are in the business of confidently loading money into a digital wallet using ACH or card rails, and confidence part comes from us taking care of KYC and fraud. Before that, I was leading fraud for Coinbase and then Revolut.
Yeah.
Wade Arnold, CEO of Moov, and been in financial services almost as long as Shamir, good or bad. Started and built the company Banno, sold that to Jack Henry, hung out at Jack Henry for a bit.
How long?
Huh?
How long?
Just over 2 years. And
it's a weirdly specific amount of time. I wonder why.
Yeah.
There's no shame in that, Tommy.
Yeah.
It's all right.
I'm glad Ben's still there. Got to build a bill pay system with Bilgo, and then kind of had a passion project where I built an ACH library on my Wade Arnold GitHub. And I thought I was the only human alive that would ever think that was interesting, and turns out there's a lot of nerds in fintech these days, so thank you for being here.
Yeah.
Thank you so much for being nerds in fintech, everybody. All right, so I'm going to start just super high level and ask Shamir, when did you first learn fraud was important and that it might be a thing you need to pay attention to?
So I did a fair amount of fraud consulting at McKinsey, 15 years ago. But the first time it really hit home to me was when we realized at Simple that we had lost a ton of money, probably closer to 400K than 250, and we hadn't even built the systems to be able to realize that. So it's only when we did a reconciliation of our FBO accounts, we were like, wait, there's much less here than there should be. How is that happening? And we realized, oh, we've had like a solid 5% of our customers for the last few months have just been straight up fraudsters.
Wow. That's a big realization. How about yourself, Wade? When did you discover that fraud was kind of an important subject that you need to pay attention to?
Yeah, I think every fintech starts thinking, things like fraud, risk, compliance. It's an easy one to put on the back burner because until it happens, there's no issue, right? And so then the first time you lose a couple $1 million and your entire executive team is on their cell phones trying to claw it back, it becomes a really important feature in your technology stack. And so I think in my career, I've always been fascinated with the level of intuition, talent, and engineering that fraudsters bring to the table. I always just wish I could give them a job.
It's a great way to apply for a job. We will get into some of that ingenuity in a second, but Tommy, you had a saying when we spoke last that I really enjoyed, which is that fintech has something called fraud market fit. What does that mean?
Well, I want to bring this back to Twitter, which is the most important thing that we could talk about on stage.
Right.
Which is I saw, and I hope the person's here, and I'm not making fun of this person, but I saw a tweet the other day that basically said like, wow, it turns out like fraud is something you actually have to deal with day one if you're building a lending startup. And then I was like, that's a great realization. And then like the next tweet in the chain was, well, so what happened is I've been giving people loans with no recourse and they're just not paying them back. And I was like, no way, they're not paying them back.
Wow.
Why would they do that? And so what I mean by fraud market fit is from day one, if you're lending money or allowing people to move money or letting people spend on a card or store money, the first and the 10th and the millionth user can take all of that money from you. Yeah. If a product is on the internet and you can sign up for it, there's no rate limiter on how much fraud can be perpetrated. This is actually kind of like a bad thing for startups, which is that Bank of America and Simple, when it launched, had the same amount of fraud that could happen. Right? Bank of America's branches, when we're talking about branch banking, they could have way more in-person fraud because they're the ones with all the branches. And if we started a one-branch bank, well, we can only get defrauded in this one branch. Yeah. It's limited by the number of people who can walk into it.
The scale is just completely different.
It's totally different. It's scalable from day one, and that's what fintech having fraud market fit means to me.
Scalable fraud. Shamir, you wanted to jump in?
I was going to say, and also, like, if you look at all the large banks, it's not that they're doing better than the fintechs, neobanks, or cryptos, right? But it's like the average customer for Bank of America is probably like 55 and has been a customer for like 15 plus years. And you're like, the new customers and the young customers of Bank of America is, 5-10% of their customer base. For anybody in the fintech, crypto world, it's like 90%, right? And you're growing so fast. And it's your new online customers where you're always going to see all the fraud.
But I mean, I think that speaks to something important about financial services and why fintech exists, which for me comes back to financial inclusion and financial access. And if you think about the vast majority of fintechs, let's take neobanks, digital lenders, all of these new models, right? They're built for people who weren't visible in the banking system. They weren't a part of financial services previously. And so I think that does introduce this really complex layer of understanding how do you do KYC on an immigrant population? How do you build a credit underwriting model for people with no FICO scores? So it's really actually very kind of, I think for me, tied to this idea that fraudsters are taking advantage of something that's supposed to be creating innovation, right? And when you go to an audience that doesn't have a footprint in traditional financial services, it does get harder, which isn't how it's supposed to work, unfortunately. And I think that pressure point of thinking about access is where we should continue to place our bets in fintech, because that is what betters the American wallet.
And I think that was what I tried to say in the opening, which is nobody gets into trying to build a fintech company thinking, oh, I'm going to have the best fraud prevention solution whilst I build a neobank. It's usually for inclusion. It's for this positive, happy path. But sometimes you build for the happy path, and in financial services, it has a way of showing you all of the unhappy paths and all of the things that can go horribly wrong. I think that's such a good point. Soups, I want to start getting into the war stories bit. There was something you said in your presentation yesterday, which is fintech has a first-party fraud problem. Yeah. Can you talk about what first-party fraud is and just kind of unpack that a little bit?
Yeah, so first-party fraud is essentially someone claiming they went to the ATM, used the neobank card, and the ATM didn't give them the cash when they actually got the cash. That's one example. The second example could be I bought crypto or I bought stocks, but the trade went south, went against me, and then I claimed that, hey, I actually didn't do it. Somebody else did it. So yeah, I would say third-party fraud, which is basically somebody else taking over your account and then taking over your bank account and connecting it to the fintech to move money, right? And use the fintech as a vessel to essentially steal money. That is easier to solve. First-party fraud is much harder because how do you distinguish between someone whose card truly got lost versus someone who's claiming the ATM didn't give me the cash, right?
Well, and this could be, again, somebody who is in a lot of trouble in their life, is an immigrant, is somebody that is just trying to make rent and has genuinely lost their card and might not be. And that's a really tough spot to be in.
Yeah. And the most interesting thing here, though, is that if you really think about it, the banks, the big banks, they work with each other, right? So early warning system is a bank-owned consortium. So if you had like a stolen Chase card, you couldn't really walk into a BofA, or if you had a stolen Chase account, you couldn't really take that to BofA, right, or Wells Fargo, et cetera. They share this information with each other. But then you could easily take, like a stolen Chime account, link it to Varo, link that to Aspiration, and so on. And no one would know about it, right? No one, because there's no data sharing happening amongst fintechs. So that is something we are really passionate about. How do we actually get data sharing happening amongst fintechs? Because at the end of the day, and then going back to Stephanie's point about financial inclusion, right? It's the other mirror image of that is that if you can't really solve for fraud, right? Then the cost of moving money for everyone is high.
Yeah. Well, in the fraud layer, I mean, it really shows itself in the fact that the, sort of workhorse of the financial services system is ACH. It was designed 50 years ago. It was never designed to contemplate digital KYC, the Internet of Money, and it has flaws in it, which is the speed at which the data around the transfer and the actual transfer occur. And it's totally incongruent with where we are in terms of payment innovation and the necessity of getting to real-time settlement. And so it leaves open the opportunity, because it's fully rules-based. It's written. Like, you can literally just go research the rules. And I think it's a flaw in the system that has to be course-corrected. Otherwise, you just leave open the rule book to the fraudsters.
One of the
what are you
things that's
trying to say? No news is good news isn't a good policy?
I'm pretty sure no news is good news is not the way we want to build the payment system in the future.
Yeah,
I feel like every fintech founder has the same realization, which is that ACH, how we move all of the money, is just like a flat file that you like hand to a bank, and they're like, oh, you want to take money from that account and just give it all to this other account?
Okay.
Great. Right?
Yes.
Like, that's how it works. It's
And then
just
you're like, what's the authentication system? What's the
no
authorization
authentication system.
There's none of it, right?
No, it's just like.
But it's completely reversible.
I mean,
Yeah.
technically,
Right.
it is SFTP.
Right, well, SFTP is
You have a username and
strong
password.
authentication.
So really, Wade, what you're saying is Excel is how payments work
Yeah.
in ACH. That's what we really take away from
Whoa.
this
Now we got
conversation.
formatting.
Excel
There's
is
no
way more
formatting.
flexible than that.
But that,
Excel would be an improvement.
I think that flat file point of like the coming of age realizations that you have as a fintech company are really, really interesting. The coming of age that, oh wait, I've lost $400,000, where's it gone? Oh wait, I just sent a file and it just happened. It
just goes.
And then there's all of these things that can go horribly wrong. And all I wanted to do was include some folks that were excluded before. Why does this happen? But I think there's a lovely point that this happens to all of us. We've all been through this journey. So if you're going through that journey, there's kind of nothing to be embarrassed about, but there's a lot you can do about it. So I think we'll come on to the stuff you can do about it, but I'm interested in some of your war stories and some of the things you might have seen. I don't know if, Tommy, you've seen any particular interesting examples where you can change the name of the innocent or the guilty of like a type of a fraud typology, as they'd call it, that really caught your interest.
Yeah, well, the first one that I ever had that really blew my mind was I was actually, so I said I did nothing notable before Alloy, but I did work in ACH processing, the most notable profession in
Rock and roll.
It's so morally pristine and so important. But so I worked in ACH processing, and we had really, really strong fraud prevention controls, because if we didn't, we would lose a bunch of money.
Oh, yeah.
And I remember the first time that I ever turned somebody away from having a processing account with us, and they just insisted, like, no, I should have this, I should be able to process ACH with your company. I am a real person, I am not gonna defraud you, like calling, sending, like just
I'm
really
not a fraudster,
insisting.
honest.
Yeah, and I had this person go through the sort of like, well, nobody who is fraudulent would ever actually do all of these things list, right? Like, take a video of me and you and your family, like, holding all of your IDs, like everything you can possibly do, and just stole $100,000 as soon as we gave them the account. And I was like, trust your instincts, dude. Like, trust your instincts. Like, but it was one of those, like, wow, this person is not afraid of being prosecuted. Like, they do not think we will prosecute, because this is definitely who they said they were. I've got a video of this person. Like, this is definitely not third-party fraud. But they were just, they were willing to. $100,000, I guess, is like a pretty tempting honeypot. So,
I mean, people will do crazy things, right? Like the fraud which still sticks in my mind over the summer. So cricket is a huge thing in India, and there's the professional league where they play games and everything else. And so these guys in Western India They found a bunch of farmers, gave them clothing, set up a complete fake professional cricket league, played matches, and streamed it on YouTube so that they could game. There was a bunch of Russians betting on it, right? And I was just reading this whole thing, and I'm like, they made out with like $3,000, and then all got arrested, right? And I'm like, really? They went to this much work and effort for this narrow niche audience of like Russians betting on cricket for $3,000? And so the inventiveness of fraudsters online is just amazing, right?
My team won't wake up before 8 a.m. for $3,000. So
And these were like 20 plus guys working for like a few weeks for this, right?
I promise we work hard.
Yeah, we work really, really hard catching the fraudsters. I promise we do. Look at a picture of us working hard. Here's a video of us working really, really hard.
I totally believe it.
Any others that anybody else wants to throw in on the war story side? Anything we've seen, or even just some general types of things that are really common that are out there at the moment? There's a lot in the Wall Street Journal recently about Zelle and that sort of thing. Does anybody want to jump in on that one?
Yeah.
I can chime in about Zelle scam. So for those of you who were at my talk yesterday, I did an elaborate talk about it. But the thing that we saw in crypto, which is circa 2017 at Coinbase, et cetera, was that social engineering fraud via TeamViewer, et cetera, had really, really taken off. People would essentially call you up saying, hey, do you have a KYC problem? Is your money locked up in Coinbase? I can actually help you get it out because I'm calling from Coinbase support, tech support scam, basically. And they will essentially then socially engineer you into installing TeamViewer, AnyDesk, Citrix, any of those remote screen sharing apps that tech support typically uses. And then they will actually move the mouse on your behalf, and then unbeknownst to you, when you're not looking, not paying attention, they blank out your screen, and then they wipe out your wallet, right?
Yeah.
And we see the same thing now happening with all the banks and all the consumers of those banks which are using Zelle. They are being socially engineered over, again, TeamViewer, et cetera, so that you're sending money to buy a gift card or to get a refund. I don't know how people fall for those refund scams. It's fascinating how fraudsters are able to con mostly all these elderly victims.
I think the social engineering piece is so fascinating because if you think about where we are today as humans and what did 2 years of a lockdown do to us, right? And what weakness did it expose in the human psyche that's currently being taken advantage of? And I think about my mom on Match.com and the social engineering scams she sees. I think about what's in my WhatsApp and the number of times I get a hi and then meet me at the park. And it's like, where that's going, right? But there are people who are alone, who haven't touched another human in years, who are susceptible. And so I think that this isn't a payment system problem. This is a social engineering issue. But it's showing up as fraud in places where we haven't yet mastered fully digital identity. To Soup's point, there isn't an early warning systems for fintech, and there should be. Right? There are just fundamental gaps in the infrastructure that we rely on for financial services that didn't catch up. And so the social engineering piece, I think, just really comes back. And I really wonder the psyche aspect of what we've been through and how that does influence people, where I feel like, whether it's like the Tinder swindler, which we all laughed about, but actually that happens, right? And just, general curiosity about how we come together in the fintech ecosystem to start to build up muscles to protect our customers and the end user from being privy to one of those scams where they're otherwise unsuspectingly, unknowingly going to be caught in something dangerous.
To that point, we saw, this was what Soups was talking about a second ago with the sort of scams and the data sharing, the lack of data sharing. I think that call to work better as an industry on that is one I want to echo. We've seen similar things in the UK. We had a lot of folks being scammed because we have real-time payments in the UK with faster payments. But then you saw this rise in scams as mobile devices came along. And so they just introduced something called confirmation of payee, which essentially says, we, the bank, think you're trying to pay this person. Is that who you think you're paying? And that just became a standard. And there'll be many other things like that that we can do as an industry that start to improve things because the infrastructure itself doesn't have that baked in. So it's on the builders here to go make that happen, which I think is a wonderful call to arms, Stephanie. I think we should do more of that. Shamir, you wanted to jump in there for a sec.
Yeah, I mean, I think that, like the dating scams, that there's I mean, they come in waves, and they've been prevalent before. They'll come back again. I always found those like the saddest stories, right?
So sad.
Where you hear the story of somebody who's like, yes, I met this wonderful person, and we had this relationship, and then he like was cycling in Spain and broke his leg or whatever, and I had to send him all this money, and you're like, wait, have you ever actually met this person?
Wow.
This was all over like WhatsApp or something. So this is a complete online relationship that has been built over months, all to like, defraud somebody of like $1,000.
Catfish plus money.
Completely, and it's just so insane, and it's very hard to catch because it is a variant of first-party fraud, right? And it's not.
You did it. They
they did do it.
Did this payment.
You did send that money. You were just tricked into
You were
doing
tricked into
it. So
sending it.
that brings the liability question up, and liability looks different. So the thing with the Tinder swindler is there is a scene in that Netflix documentary in which folks from Amex, American Express, show up and sort of almost put their arm around the victim and say, don't worry, we're going to get you your money back. And you can see the emotional relief that they go through as a result of that. But that's not the same for all payment types. I don't know if anybody wants to sort of talk about the difference between cards and some of the other payment types.
I think, actually, I'm glad this was recorded because Soups did an amazing job of running through some of that in his talk yesterday, and I learned a lot. One of the things that I want to just kind of reframe is there's liability, right? Meaning like literally the chargeback happen, or the fraud happens. You call your bank, do they have to give you your money back? Do they have to take it? That's one type of liability that we can talk about. What I candidly think has been disturbing, in my view, is the like responsibility liability that Zelle in particular has just completely not taken.
Yeah.
I mean, their view is like, well, there's nothing you can do. I mean, they did it.
Yeah.
It's like,
You were tricked into it, but you still did it.
right,
So
and we did nothing to stop you. We did nothing to help you. We don't think we should. Like, that's kind of been their stance. And it doesn't pass the smell test. It doesn't pass the, like, if your mom or your dad didn't know anything about fintech and you just said, hey, do you think Zelle has responsibility for stopping their customers from, like, being defrauded if there are ways that they could do that? They'd be like, of course they do. You'd be like, Mom and Dad, I have news for you. They don't give a shit about that because they don't have to. They'd be like, well, that's crazy. That's not how that should work, right?
Well, it feels like the fiduciary standard is lacking.
Exactly.
Right? Like this is a bank-led, actually closed-loop system, and the fiduciary standard to like deposit money into a bank account should be there for these types of transfers.
That's how I feel.
So CFPB
But at the
has
same
said that they probably want to actually put Zelle scams in the category of Reg E, in which case the sending bank from whom the money was taken, if they didn't actually do the due diligence to actually stopping the money from leaving, then they would be liable.
And I think that makes sense. Like, this stuff is on social media. You can go on Facebook and it's like, this is how you do it.
Yeah.
And like, so it's
There's Reddit channels on how to do this.
yeah, it's not like there's nothing you can do. The main thing that you can do is to say, it looks like you're sending a payment to somebody you haven't sent a payment to before. Is somebody talking you through this?
Yeah,
Like,
yeah, exactly.
And Venmo and Cash App have found that stuff, just little
It's
things like
actually
that.
effective.
It's
Yeah,
actually
It used to happen on Venmo and Cash App.
Exactly.
And that's moved all to Zelle now.
Well, Mike Vaughn, who is the COO of Venmo, one of the investors in Orem, was telling me, trading war stories, and he was like, oh, the number one scam on Venmo for a long time was a drunk woman and a man at a bar, and the man's like, hey, let me get your number. And you grab the phone, and the phone is facing now away from the woman, and he would literally move the max amount out of the Venmo account, and there's no recourse for that. Now, Venmo has since really understood this problem and added things like the phone number, the last 4 digits, like a bunch of different ways to control for that. And that's not a perfect scenario, but these scams have existed for a long time. And I think Venmo took responsibility in a way that Zelle didn't. And these are the examples of, as we have builders in the room, think about what's going on in the application you've built. Think about the various places in the UX where you could add a control, where you could add something that's not frictionful for the wrong reasons, it's frictionful for the right reasons. And in wealth management, markets are down. There's always a question of like, hey, before you sell, let's talk through.
Right.
This concept exists of protecting consumer behavior. And again, I repeat the call to action. I think it's on us as builders to think differently about the way we build our next generation financial services products.
And I think that's important for
protection.
trust, but what also blew my mind is how, if you're talking to the CEO or the investors, it can impact growth. Like high fraud rates, suddenly you're in the press, and suddenly that card that you've launched and given to everybody is not being accepted by merchants anymore because you've got high fraud rates. Wade, I don't know if you want to talk about what some of the consequences are for that, and did you ever experience or see others go through that sort of thing?
Yeah, absolutely. You know, I guess to wrap up first-party fraud, it's almost like humans are willing to lie to benefit themselves.
No way.
Yeah.
No.
Never heard that before.
It's like money corrupts, huh?
But in order, you know, what's the practical takeaway? I think as a developer, it's really easy to compartmentalize things beyond login. And having a mindset that logged in user can create fraud. And there's almost a stereotype, I think the Hollywood stereotype, that there's, you know, somebody with 6 screens scrolling in a blacklit room. And they're, you know, doing all these things in order to break in through the back door. And the most common fraud that cleans out most systems is people lying, walking straight through the front door, getting a loan, and sending it to a different institution, or cleaning out the account that way. And then they do this thing called lying, where they say they didn't do it.
Yeah.
And I think as a developer building products, just getting behind this concept that multi-factored, YubiKeyed, authenticated user may do something malicious is a key differentiator in what's happening here. And so not always thinking about your product as a perimeter, and if you get in, now you're safe, but truly not trusting anybody, regardless of where they're at.
And wait, I see so many customers who think that KYC is the anti-fraud solution, right? And it is totally not, right? Like, it is a regulatory, a compliance process that you need to do, and it does help with fraud. But, you know, everybody's SSN is on the dark web somewhere, and fraudsters are amazingly inventive at getting through pretty much any kind of pure KYC process, right? So just to that point, you have to build your customer-facing product the way that you run your internal tech stack, right? Like, nobody in your dev team, the moment they sign up and get their YubiKey, has full access to all the GitHub, all the databases, and everything. Right? Maybe a couple of people in the company, but everybody has graduated levels of security. You have to treat your customers the same way and say, okay, you got through KYC and whatever my initial anti-fraud controls are, but I'm going to let you do certain amount of damage in a certain amount of time, and then over time, when I know that you're a good customer, I'll give you more and more access, right? And if you look at your fraud levels by like how much fraud happens on a user's first transaction versus their 5th versus their 15th versus their 30th, you'll see it drops off dramatically, right? Because the fraudsters want to get in, get the money, and get out. So it comes down to that, like, conversion versus fraud problem, right? Like, everybody wants conversion, and until you have enough customers and you convert them and you grow your business, it's like building all the anti-fraud tools is really useless. But at the same time, as soon as you start getting that right, you will get walloped by fraud. So you have to keep this kind of, you have to build a conversion engine knowing that the fraud problem is coming, and start working on that at least a little bit from pretty much day one. Because otherwise, you'll wake up one day and you'll have lost 20K or 50K or 400K.
Or 400K.
Well, it's actually
Or 400K.
Tommy, I think you always say, hey, we at Alloy, we provide essentially like an out-of-the-box way for fintechs to know kind of where to set the boundaries. And most fintechs are like, no, we don't have fraud, and they tear that down. And then they come back, right?
Not a
And I
good
think what I've
customer.
observed about that
We
is
don't
like,
have fraud.
Yet.
well, why don't you have fraud?
Yes.
Let's unpack that. You don't have fraud because I would say definitively your first customer is friends and family, right? If you're building a consumer app. And friends and family aren't here in service of defrauding you. And so you're thinking about, does the marble drop from front to back, right? And then you advance to, you know, maybe a GA, and then you advance to figuring out, okay, how do I do, as Shamir said, real growth and acquisition? And
at
I
that
just don't
point-
think we should have to pay the fraud tax. So just know that, you know, as Alloy, you know, as Orm, any of us on stage have like kind of lived through this. The idea that you're not going to have fraud, start with the fact that you absolutely are going to have it and make it a priority, right? Because then you're not paying a fraud tax that you have to figure out growth around. I think it is actually kind of a first principle of fintech building. as opposed to an afterthought where it comes in later when it becomes an issue. The more you can do now with great turnkey vendors, it's not a fully solvable problem in every case, but I think it's a place where you can get 75 to 80% improvement before you ever launch out of your friends and family.
Why not bake it in? And I think that point is the one that can start to impact growth rates over time as well. So whilst a lot of companies spend on marketing, here's a $5 giveaway to start using this tool, as soon as somebody's doing that $5 giveaway, they become a target for fraudsters, because fraudsters are looking for that growth company who's doing that giveaway because they can get in and get out.
Yep.
And so that growth stage is a really dangerous one. It blew my mind. Any other thoughts, Soups? You were going to jump in there for a sec.
Yeah, no, I was actually, one thing that I was thinking when everyone was, we were discussing it here, if you think about it, the security industry has it much, much, much better than the anti-fraud industry, right? Day one, when you launch your fintech, you don't see account takeovers on day one. You definitely don't, right? So what has happened is that, I think if you really go back to what we learned in school, right? You learn security in school if you're doing computer science. You don't learn anything about anti-fraud, right? And that's one problem. And then the second problem is that, we basically now, or rather the solution should be that we should think about fraud from first principles, just like you think about security from first principles from day one,
Yep.
right? Yeah. Almost like there should be pen testing of fraud.
Yeah,
You should
That's
do
a
it.
startup idea for whoever's
That's
out here as an
there you go.
entrepreneur.
Raise your hand if you're doing that.
That sort of white hat fraudsters feels like a thing that should be at DevCon. Of bring your neobank and
Yeah,
we'll
let's all try to
defraud
hack
it.
each
Let's
other's
all try to
neobanks
hack
at
each other's
DevCon next
neobank.
year.
I'm going to bring my cricket outfit next year. Who's with me?
With only maybe with the caveat that doing it first party is too easy.
Yeah, that's
right?
cheating.
That
You
is
have to use
cheating.
somebody
You
else's
have to use somebody else's. So I'll steal Tommy's identity. Soups can steal mine.
Yeah. Can I add one last thing to the conversation, which is just to that part of the conversation, which is just a general piece of advice when it comes to fraud and fintech in general. I think technologists dramatically underestimate, for good reasons, two things: physical space and physical time. It's because everything in the compute world doesn't have very much to do with physical space. Yes, storage takes up space, but that's all theoretical to us now because it's in AWS East or whatever. And time, everything happens real time. But physical space and physical time mean a lot, and they impact a lot. So the one example that we just talked about is, what if you just don't let them defraud you very quickly?
Yeah.
Why would that matter? They'll just figure out it's day 101, and no, it does matter.
It matters a lot.
They sleep on it.
Because they sleep on it,
cells, man.
and they'll move
and
on
they
to
know
someone
exactly
else.
the time limit. Yeah.
Exactly. And the second thing is, if you can introduce physical barriers to entry, meaning they're going to have to physically work harder to defraud you. They're going to have to go get a cell phone registered in the name of the person they stole, or they're going to have to, if you can think,
They're going to have to make an ID
they're
which
going to have to
matches their
make an
face.
ID,
Yeah.
and they might do that.
They
And
might.
That doesn't mean
They probably
that you're
will,
not, they
but you'll
probably
reduce
will.
it.
But it's going to be a lot harder if you introduce elements of physical space and physical time into the equation, and you do it smartly without impacting conversion. Well, that's the trick. That's what you all have to go figure out. But that stuff works.
And knowing when to say no. So there are things that look suspicious. I never knew what a tester transaction was, where suddenly on your foot you start seeing oh, somebody spent 39 cents, but that wasn't me. Oh, somebody spent $1.04. Oh, that wasn't me. Oh, wait, $1,000 has gone. How did that happen? And so the criminals are testing. Does this account work? Does this account work?
Yeah.
And so you see these transactions happen very, very quickly, so they have a high velocity, there's a volume of them, and so you can start to build as builders, and that's one of what Alloy and Sardine does, and many others tools out there, is they allow you to build these rules, and they have plenty already baked in that are just this is the 80% we see everywhere, so you're just baked in. And I think that was your point, Stephanie, wasn't it? So I'm just going to move us now to, we've talked a little bit about what people can do. there are consequences for getting fraud wrong. Whilst I know some of the liability in some areas may not be where it wants to be. But Tommy, when we spoke before, there are consequences for a neobank, for a fintech, for not getting this right over the long term. What are those consequences from the regulator, from the market, and from everything else?
Yeah, and so the consequence, what we're seeing, that we're all seeing and we've all been talking about that's happening right now, that's a little different, is what you touched on earlier. It's reputation.
Yeah.
We think of fraud as something that comes without reputational risk, because it's like, okay, if, I don't want to use, like if Bank X loses a bunch of money, maybe that shows up in their public filings, but otherwise, like what, I don't care if they
Victimless crime.
Victimless crime, like, right? One, it's not a victimless crime to the ecosystem. So if somebody's using a bunch of neobank bank accounts from a particular bank as a cog in the wheel to commit fraud on others, we have all lived in a system and grown up in a system where that wasn't likely to happen. For example, like the early warning banks, like they figured that out, so you didn't see Bank of America bank accounts getting created a whole bunch to go defraud new financial services companies, although there was like this big, there was this era of like PNC accounts being what everyone would, if anyone remembers that era.
Virtual wallet.
I'm actually not 100% sure why that was, but.
Virtual wallet.
Oh, that's what it was? Okay, well, that's what it was. So that's one. And then the second is increasingly these fraud attempts are not victimless. And people are going to start finding out, oh, I just got defrauded, and oh, the bank account that they exited the money to happens to be, like, not using names, fintech X. That is something that people are aware of, and it's in the news. And so the ultimate, there's the trust and the brand aspect. But then there's like fintechs cutting each other off.
Yes.
You cannot use a PNC bank account, or you couldn't a little while ago, to deposit money into Robinhood. They stopped allowing that because they saw too much fraud.
Things just stopped working for your customers.
Things just stopped working. That's a really weird consequence, because we are used to a bank account is a bank account. You can move money from that bank account to this bank account to that app, and that is already breaking down. It'll break down further, and eventually, and actually it's already happening, the CFPB will step in and regulators will step in, because that's what they do. We all got used to 4 years of a different regulatory regime when all of this was going on, and nobody wanted to do anything, nobody was paying any attention.
And it wasn't that big.
It wasn't that big.
We're now like 3 times bigger, the whole industry.
The whole industry is bigger. Regulators always pay attention someday. You can get lulled into thinking they won't for a little while because of who's in the seat or whatever. It's not going to be that way forever. So I think people need to pay attention to the reputation that they're getting amongst people, the reputation they're getting amongst us, and the reputation that they're going to get amongst regulators who don't have a lot of nuance to the way that they operate once they get an idea in their head.
Well, and suddenly profitability matters again, doesn't
Oh,
it?
sure.
And
I mean,
fraud
yeah, it's
has a
like
cost to it.
You can go bankrupt from fraud. It is totally possible, especially if you're small and early stage.
Yeah.
So yeah, this happens.
I think when you bring it back to, again, I'll come back to financial inclusion and access. Let's say there's now a brand we know with 10, probably 20 million underbanked customers. And that brand is regularly in the press as being blocked by Robinhood, by others. And so now we've made it okay to say, if the underbanked credit invisible population in America banks here, they can't invest. And I think that's fundamentally wrong. If you banked at small bank Iowa, we would never allow for that, right? And so what made it okay to block Americans from access to financial services in this moment?
Yeah, it's a fraud problem. Yeah.
I mean, there's
It's
this
weird
secret-
how once you start to see the fraud problem, you see it impact everything. It's got tentacles.
everywhere.
There's
really,
these
you can't
secret
unsee it.
blacklists across the industry, right? Like you'll find certain card processors just block certain bins, and you don't even know until some customer goes and tries to swipe there, and you're like, why doesn't this card work there? Because 4 years ago they saw some fraud from that bin and they blocked that bin, and you can't even figure out how to change any of that. You'll find certain banks or certain fintechs block certain other routing numbers, and it's like at the routing number level you're blocking who knows how many
Uniform.
different things.
We see it all the
Right.
time.
Yeah.
We see it all the time.
Yeah, it's there.
You'll go look at the deny list and it's like, oh my gosh, there's a bunch of routing numbers on here. Like,
Yes.
that's not good.
Yeah.
Well, it comes back to another part of fintech innovation, which is using program banks, which are Durbin protected. And so let's say you put a Cash App and a Propel on the same program bank. but the routing number is the same, and you can't identify the fraud patterns.
Where did
so you
that
just
come
block
from?
everybody. Where did that come from, right? So there is a data issue here.
And
Most
also,
of the friction that you, sorry, Shamir, most of the friction that you see in any fintech or financial institution is probably because of fraud or some fraud rule somewhere which someone forgot about. Right?
exactly.
Your card didn't work because somebody put in a fraud rule 5 years ago and never took it away, and there's all
They
of
don't
those
even
sorts
work
of-
there anymore.
Well,
And
what's
they
the
don't even
consumer's
remember.
right to know about that,
Does even
right?
everybody know where the fraud rules are, actually?
Because it's all kind of in the underbelly, what's the consumer's right to be able to say, hey, I've been on this blacklist and I deserve to get off?
Tell me about it. Like, for whatever reason, the UK government seems to think every time I walk back into the UK, my passport is a dangerous one, so I always go to the naughty line. And I have no recourse of getting off that naughty line. That's a mild inconvenience to me, but if I can't get paid and I can't pay rent and I'm going to get turfed out of my house and be homeless, that is a heck of a consequence. And what's my recourse to get that undone? It's really.
Can I just say that I do think it's reasonable that they're putting you on the naughty list?
It's where I live.
I just felt like we should say that.
I think that needed
I
saying.
feel that,
And
yeah.
speaking of things that need saying, there's 5 minutes left. If you guys have any questions that you want to throw to the panel, we got time for a couple. Just shout them out, and I'll try and repeat you if you're quiet. But if not, please do shout them out. Any questions in the audience before we close this one out? Show of hands, because I can't see you all. Yeah, there we go. Go.
How do you balance between overprotective
Yeah.
and kind of blocking too much where you are kind of being
Yeah.
having a certain amount of basic and acceptable amount of fraud?
Yeah.
That's an interesting way. So the question was, how do you balance accepting a certain amount versus blocking? Where do you find the line of what should be blocked versus what should be accepted? Anybody?
Well, so
Yeah, I wanna
ultimately,
say,
Sorry,
yeah.
Shamir.
Oh,
I was going to say, ultimately, we all pay for fraud, right? Like, if the bank is having a lot of fraud and it's not gone out of business, that means it's recouping the money from revenue, which comes from all of us, right? So it really goes back to what your revenue model is and how much fraud can it take. Ideally, we want zero fraud, but that's never going to happen. So you need to know what your revenue model is, and you need to be able to measure all of it.
False positives, right?
Yeah, I was going to say, so yeah, 4 years at Coinbase, first 2 years I spent adding a shit ton of friction because fraud rate was like through the roof, brought it down to like 20 basis points. And then the next 2 years I spent removing all of that friction.
Yeah.
And so then basically loosening it up such that we could get it down to let fraud rise up to like 40 basis points. And as I said, like most of the friction problems that you would see were caused by fraud, right? So there is a certain balance you have to always take. You have to figure out how much is the loss rate you're willing to take and then guide that decision basis of that.
Can I give a piece of advice to the crowd that's thinking about this issue? The one thing you need to keep in mind is what I call like the blindness problem or data censorship problem, which is the hardest part of what we call funnel reopening, what you just described, like trying to reopen your funnel after you've shrunk it, is every single time you shrink the number of people you can let through the door, you are increasing the population where you have no idea whether they're fraudulent or not. And that's true of credit risk as well. If you think somebody was going to take money from you, and so you don't let them have the money, move the money, or whatever it is, you now have no reason to believe that they either were or weren't fraudulent. Think of it this way. If you decline 50% of your applicants, then the only pool in which you can measure effectiveness of your fraud rules is the 50% you
approved
accept.
group.
You know nothing about the 50% you decline. I can talk at length about how you try to solve that problem, but it's the fundamental thing. And when you're talking to your risk and fraud teams, if that's not acknowledged and thought about, then they're going to get in a cycle that's really counterproductive and always say, oh, well, we have more fraud, shrink the funnel. And like, it can get really bad.
You could just say no to every customer
You could
ever
easily
and
do
have no customers and no transactions, and then you'd have no fraud.
Exactly.
Simple.
Well, speaking of no fraud, I have a hot take here.
Ooh.
We didn't talk about it, but real-time gross settlement, AKA not ACH, has real potential. And I think, I'm waiting for Jamie Dimon, somebody, to step forward and say we're sunsetting ACH, effective 2035. Whatever the timeline
Even
is.
that sounds very optimistic
That's
to me.
faster
But
than
like,
fake
guys, we
hours.
got on 5G, okay? We've been able to create like
Stephanie.
communal progress.
I can't believe you just said
Next year is going to be the
2035.
end of the check
Stephanie,
as
I'm
well.
trying to be
Payment sys-
realistic.
Old payment systems never die. Like every payment system.
I'm sticking my neck out there for the next generation. And guys, we're going to pay the fraud tax into eternity if we continue to falsely convince ourselves that a penny ACH is cheap. A penny ACH is the most expensive payment transaction you can do in the industry. Bar none, it is the worst type of transfer that exists because the data blind spot and the speed at which money and data move. We have to move to real-time gross settlement.
We
We do have checks still. So,
I was going with. I
so
was
the
going
United
with
States
cash,
government's not super great at canceling payment rails.
I was
Yeah,
going with
that's-
cash, but yes.
But if we're going to get off checks, which is occurring
Which
at a
is
faster
occurring.
rate, why are we going
That's
to
glacial.
ACH? Let's take it to real-time payments.
Well, that is a call to arms if ever I heard one. We have 22 seconds left, so I'm going to close it here. I want everybody to thank this incredible panel. Thank you guys so much.
Yes.